What are some of the things that investors can do to practice patience on a regular basis, given, as you wrote in your book, it takes approximately 25 years for a company to grow 100-fold?
Yeah, I mean it's kind of like a bell curve as far as the population goes. So the kind of median and average was about around 20 to 25 years, and so that implies compounding at about 20 to 25%. That's the rough math of it. Of course, there are outliers in either direction. There are companies that have done it inside 10, and then there are companies that took 35. So it really depends on the rate of compounding over what period of time.
Mm,
Um,
mm.
and then I forgot your question
So
actually.
individuals, like a 25-year wait is a very
Oh, right,
significant
right, right.
percentage of
How
your
to,
life.
yeah,
I
this is a
mean,
big part of it. This is a big
yeah,
part of it. As everyone asks, like, well, how can you, what can you do to increase your patience over that time? Because it's, I mean, when you look at all the stocks in the study, they've all had tremendous ups and downs. You have to sit through 50% drawdowns. And then there's
mm,
also, which I think is maybe underrated, but maybe worse, is the long periods where the stock goes nowhere. So
yeah,
I
yeah.
always like to point out that Berkshire Hathaway is the best performing stock in the study, and yet it had a 7 year stretch where it went nowhere. And that's a long time to hold the stock and have it go nowhere. Meanwhile, you're being bombarded with news and you see other people and they're telling you about stocks that have gone doing well, and you're sitting here with your stock that hasn't gone anywhere for 6 or 7 years. And again, that was the best performing stock. And I've done some similar analysis where I've looked at companies that I own and look back, and I've seen the stretches 5, 6 years at a time where they went nowhere in the middle of a 20x or 30x run. So you gotta definitely practice a lot of patience. And I think the first thing to do is to focus on the business and not worry about the stock prices. That's like number one. If you're one of these people who's constantly checking your stock prices every day, and it is going to drive you crazy, and it will be very hard to do. But if you focus on the business and you only check in every quarter, so when they report the results and see that things are still on track, and even then you're going to have to give them some leeway, because businesses, if you're going to own a business that long, you're going to have to own it during periods where it's going to disappoint you a little bit. Not every quarter is going to be its best. In fact, you're going to have off years. Not every year the business is going to be at its best.
Yeah.
But
Yeah.
the book sort of frames this, and so once you focus on the business and you learn that businesses, they're kind of like, they're organic. They have nothing grows 20% every year. There's some years a little more, some years less, and you keep your attention on that. That goes a long way towards
Mm,
increasing your patience. And then the other thing is, you're going to have to shut off the news and the pundits telling you when the next crash is coming and how you should move here and there and everywhere. I mean, all of the media and all of Wall Street is really geared to make you trade, to create
mm.
transactions, and so you have to kind of find a way to immunize yourself against those influences. Those are two big things that come to mind.
It's a very good point. I launched a service about 3.5 years ago called Horizon, and its purpose is to find 10 to 100 baggers, as many of them
Yeah,
as possible. I've been fortunate enough to have two 100 baggers in my portfolio, and I can tell you that what really stopped. I cannot discount luck. Any great investor who says luck had nothing to do with it, I'm sure you'll agree, is has an inflated self view, and I know very much where luck
yeah,
played a role. And for both of my 100 baggers, the luck, if you like, was I couldn't stomach paying capital gains tax. So I was like, I would
yeah,
sooner shed something else and let your winners win is a simple adage of
right,
investing. But
right.
but what I find really interesting is the point you made is that flat is soul destroying. It's like it's
Yes,
no information. Every other idea it seems more appealing when you've bought a stock for $10 and 5 years later it's still $10 or $9
$10.
or $11. It is
It's crushing.
really, it's crushing, it's corrosive. It
Yeah.
makes you think that nobody except me will ever see the value in this business. And I think when you look
Right,
at
and
companies,
painfully, it makes you feel like you've wasted time. It's just painful, because you look back over those. You
yes,
mentioned 10 stock at 10, and 5 years later it's still 10. Well, you can't help but look back at things you
yeah,
could have bought 5 years ago. So it's very, very difficult.